This is Tesla's 12th straight green day, and things are going to get more volatile from here, especially considering CPI tomorrow has big implications for stocks such as Tesla in the automobile industry. Now, here today, things are starting off with a bang as well. Tesla is getting another upgrade that puts them well over $300, being upgraded from neutral to a buy, which is a pretty significant upgrade for Tesla. Now, we still see massive shorts in this name that are down over $10 billion. Could tomorrow's data point lead to a short squeeze? Well, there's some key technical levels we need to look at that are very encouraging. Option activity is as well significantly bullish today, and some of these orders are forecasting a very strong rally ahead with Tesla. So, ladies and gentlemen, let's get into this information. If you like to make money, if you want to grow your net worth, if you want to stay up to date with what's happening in the markets, and you like Tesla stock, well, this is the place to be. We cover it all. Hit the like button and subscribe to the channel. If there's something I missed in this video you feel that should have been included, let me know down below in the comment section. Now let's start this video off with this. I find this pretty hilarious. It says Elon Musk pokes fun at elite investor Bill Miller for shorting Tesla stock when it was less than half of its current level. It says Tesla has surged 116% since Miller cast his bearish calls. And then Bill Miller said at the time, I shorted it recently, I shorted more today. If it goes up, I'll short more. And that's kind of it with Tesla. You either love or hate this name. Some people still have $25 price targets on Tesla. And those short positions that some of these players have are getting absolutely blown up. And best part is that Tesla has a lot more room to rally from here, especially when you look at stocks such as Apple or Microsoft or Nvidia that are also high quality names such as Tesla, but are growing a lot slower, that are more legacy businesses at all-time highs. It really begs the question of, should Tesla be down here? Tesla still has almost 70% to go to get back to its all-time high. And I would argue it should have never been at $100 per share in the first place. So how much has it really rallied? Not that much in the grand scope of where it should have been, right? Shoulda, coulda, woulda, that we can all make arguments for that. Point is, you got a lot of room to go with Tesla here. And that is obvious in some of the option activity that we are seeing today. Now, before we get into that, let's talk about why some of this option activity looks so bullish today. It's because Tesla got an upgrade. Now, Tesla got an upgrade from Jennifer Liang, I don't know if I'm saying that right. You know I can't pronounce names very well, especially foreign names. KGI Securities upgraded the stock from a hold to a buy and put a $335 price target on Tesla. The average price target is at $191.96. Considering Tesla's trading at almost $250 per share, it looks like, unless you're a perma bear, you need to raise your price target. You have to acknowledge some of the positive things that have happened with Tesla as of recently, most notably the GM Ford partnership. Tesla is really not going to see competition for charging their vehicles. So just that in and of itself is a huge positive for the long term of Tesla, not to mention the many other catalysts we have covered here on this channel over the past couple of days and weeks. This is leading to some very bullish option activity for Tesla, and hedge funds and institutional investors, they're trying to get in front of this next move higher. Today alone, from hedge funds and institutions, you have seen 310 orders totaling $140 million. Get this, a positive order value of 91%. This means that if you put $100 into Tesla options, $91 were put to a bullish position and $9 were put towards a bearish position. This is highly significant for a couple reasons. It tells you, one, hedge funds and institutions want more long exposure to Tesla, but it also gives you a pretty good indication of this rally is going to continue, because some of these options are targeting the $300 strike by as soon as July 21st. Some of these options are even targeting the 320 strike by July 21st, or by August even, you're targeting 350 for some of these trades. So this would be a substantial rally from here, and I think tomorrow's catalyst is going to be very important for any potential rally, and we'll talk about that here in just a moment. But I do want to acknowledge the short position on Tesla. Now, Tesla short squeezes are different than what you would expect from a smaller mid-cap company. Tesla doesn't go up thousands of percents with a short squeeze. It's probably not even going to go up 100% from a short squeeze. Because if you did do that, I mean, Tesla would be at a new all-time high. That's not really my expectation. But I do think shorts getting blown out of their short positions, as you have seen recently with literally the last 12 days being green, if they start to cover, you could start to drive Tesla stock closer to that $300 level. And I think on a technical basis, you're very close to the point where shorts are going to have to start covering on their short positions, where liquidity is starting to be such a drag on some of these hedge fund portfolios, they are literally not going to have a choice. You have $21.67 billion worth of short positions currently in Tesla. This is up almost 50% from 3 months ago. Now, some shorts recently have covered on their short positions, but let me give you a little bit of context here. You have seen, according to official reports from the NASDAQ, the short interest dropped from 3.51% to 3.37% as of the settlement date of May 31st. You had 95.22 million shares sold short in Tesla, and now you're sitting closer to 91.19 million shares sold short. If you consider part of this rally was from shorts covering their short positions, you only seen about 4 million shares total get bought back. And Tesla's rallied from 165 to 246 at the time of recording this video. Imagine if you start to get another 5 million shares or another 10 million shares covering on short positions. That's easily going to lead you over $300 per share. And that's what I expect here over the short term. But again, tomorrow's catalyst is going to have huge implications for Tesla, but not as much for Tesla as it does for some of the financing of Tesla vehicles, which ultimately will impact demand for Teslas. Could be hugely positive what we get tomorrow. It could be negative. The cause for concern might be that the markets are expecting inflation to fall off of a cliff. If it just tipped over the edge, we could be in for a little bit of a problem. Now, the inflation rate month over month for May, you're expecting that to go to 0.2%. That would be 2.4% on an annualized headline basis. That would be very positive. This would be down from 0.4% last month. This would be the difference between further rate hikes and a pause and eventual rate cuts. Now, core inflation rate year over year, you're expecting that to come down to 5.3%. Last month, it was at 5.5%, so not as big of a drop on core. Inflation rate year over year, the headline number, you're expecting that to fall to 4.1% from last month's rating of 4.9%. This would be the biggest 1 month drop in headline inflation in a very long time. In like 20 some years, 30 some years. You have to go back to the 80s to see a drop in year over year inflation this large, this quickly. And I'm not 100% convinced that it's going to be that much of a fall. Maybe headline comes in at 4.3% or 4.4%, even though that would be down 0.5% or more from last month's year-over-year reading. It might not be good enough because markets are expecting this fall off a cliff like motion with inflation. Now, core inflation rate month over month, you're expecting that to come in at 0.4%. This actually got revised a little higher here today. Last month's reading was 0.4%. So core would be the big problem really coming tomorrow. If core comes in at 0.4% on an annualized basis, that is 4.8%. That is more than double the Fed's 2% target. Now, you're also going to get the Fed the next day. And markets right now are currently expecting the Fed to pause. Now, if inflation comes in hotter than expectations, the Fed's not going to pause. If inflation comes in what we're expecting it to, as far as the numbers I just read you, the Fed will pause. And markets will start to price in rate cuts. And this will lead interest rates to fall. Well, it will lead bond yields to fall, which affects your financing. And that would be a huge benefit to Tesla. Now, if bond yields go higher because inflation is higher than what we expect, that's not going to be good. Now, a big problem that the markets could have, though, is the speed in which you'll have to potentially readjust. There's a 71.2% chance of a pause coming Wednesday. Inflation is really going to dictate if the Fed gives us a rate hike or if they pause. So if those inflation numbers come in too high or, along expectations, you could essentially price in a hike within hours. And that would cause a big recalculation from the markets. And that's going to push out the timeline of rate cuts, which ultimately will affect affordability for financing things such as Tesla. And I think that's why tomorrow's data is going to be so important. Now, even on Wednesday with the Fed meeting, you're going to get a new dot plot. And essentially, we're going to see if some Fed members start to price in rate cuts or not by the end of this year. Markets are expecting a rate cut by November of 2023. If you don't see any Fed members expecting rate cuts this year, and maybe they even push those rate cuts out to mid-2024, because we really haven't seen the economy going into this very forecasted recession yet, maybe the Fed thinks that gives them room to not cut rates. And that would also be bad for, forward-looking Tesla demand if you consider interest rates to be a big factor of demand for Tesla, in which a lot of people do expect that. Now, if tomorrow's catalyst is bullish, and all you really need for a bullish catalyst from CPI is CPI coming in line with expectations, because you're already expecting CPI to fall off of a cliff. So you really don't need to see it fall off a cliff more than what we're expecting. That's not going to happen. It's not going to be better or a larger decline than what we expect. Now, if that happens, Tesla stock could break out above that 250 level. That looks to be the resistance right now. And if you do, you could fastly be approaching 275. That would be a move higher from here of about 11%. I think that could happen this week pretty easily if inflation does come down and you start to expect easier Fed policy. You could rally to 300 based off of that. Now, if you do get an inflation report that is worse than expectations, that inflation did not fall off a cliff, it simply got closer to the edge of the cliff, per se. Well, you're going to find some major support at 225. I think that's the low in which we could trade at. Now, this would be also in line with what other, chart chart technical watchers are saying as well. That 225 level is going to be major support. 250 is going to be big resistance. But it also aligns with this long-term downtrending line. You broke this at about 225. That would be putting more support at this level. Now, typically, once you break out above these lines, you tend to rally exponentially after that. You tend to really see that, quote, V-shape recovery. And I think especially when you consider that Tesla really should have never been at $100 per share to begin with, maybe it should have bottomed at 170 or 200, you really haven't rallied too much. So kind of to see a rally from here to 300, kind of what I expect. Now, again, 225 could be a reload level in which if you do hit that based off of a negative CPI report, that would be an opportunity to load up on some of those longs, as it looks like hedge funds and institutions continue to do so here today. Now, a simply sideways trading action for a while would also be very welcomed, as the RSI is way overbought. Some of the highest overbought levels that you have seen ever with Tesla. You have to go back to October and November of 2021 to get a more overbought RSI, and at that time it hit it hit 94 on the RSI. Right now you're at 86, so you could still rally quite a bit from here based off of historical kind of RSI performance with Tesla. But to see a consolidation, to see this RSI kind of trending downwards, would give you more of a room to see a big move higher, guys. So that is what I have for you here in this video. On top of that, last thing that I do want to point out before I do forget is this, which kind of sets in stone those inflation kind of expectations for the inflation report just absolutely plummeting. This says inflation outlook hits 2-year low in latest New York Fed survey. It says the lowest annual outlook since May of 2021. Household spending is expected to increase 5.6% over the next year as well, up 0.4 percentage points in April. And the inflation expectation is down 0.3 percentage points to 4.1%. Lowest again in over 2 years. Fueling more optimism about a good CPI report coming tomorrow. And I think that is a risk to this rally, that you're just expecting a lot. You're expecting inflation to fall way more than we have with any other CPI report. If it happens, great. If it does not, well, the markets could be in for a rude awakening, guys. So that is going to do it here in this video. Hit that like button and subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.